Investor Connect podcast program. This is Hall T. Martin. I'm the host of the show, in which we interview angel investors, venture capital, private equity, family offices, and many other investor groups for startups and growth companies. I hope you enjoy this episode. Thank you for joining us. Well, hello, this is Hall Martin with Investor Connect. Today we're here with Emlyn Scott of CP Ventures. Emlyn, thank you for joining us.
My pleasure. Thanks, Hall.
So what was your background before starting to invest in early stage companies?
Sure. So quite a background over a number of years, but I originally started as a trader in my mid-20s. After doing that for about sort of 7 or 8 years, I actually moved to the UK and spent the next sort of 13 years there, where I did my MBA and CFA, the Chartered Financial Analyst, and moved away from derivatives and trading over to business developments. And I found that building things was much more meaningful, and I enjoyed that far more than trading. I moved back to Australia in about 2010 and took over running the National Stock Exchange of Australia, which is the small stock exchange here. And they brought me basically to reinvigorate the market. And I moved the market to focus much more on early stage tech investing, mainly from listing Asian companies. And over the next sort of 4.5 years while I was there, we grew the listing volume quite significantly. And at the same time as I was there, I needed to bring online trading access to the market. So I co-founded another business called Open Markets, which we built, which was the first cloud-based online broker. And it majorly disrupted the market here. And over the sort of the next 5 years that's been growing, that's grown now to be sort of the second largest online broker in the country, which is really good. And it was kind of the combination of moving the NSX into early stage high tech businesses and co-founding this high growth business of Open Markets in the trading sector, which brought me into founding CP Ventures, which is where I am now. And we originally focused that on trying to help companies actually raise capital. We found here in Australia that there was still that lack of knowledge or education on actually how do you raise capital, which has evolved quite measurably since then.
Well, that's quite a journey there. So you've seen quite a bit of early stage investing. And for the investors out there who listen, what's your advice for those, especially those who are just now starting their journey into early stage investing? What would you advise them to do?
Yeah, firstly, I would say, given I've had fund management background now, sort of VC side, I'd say that investing in anything where you don't know what you're doing to start with is gambling, whether that be shares, property, VC, private equity, anything. So you've really got to obviously know what you're doing. But taking that kind of a step further, I would say that investing in VC, you should start trying to do that, or investing in the sector, you should try and do that alongside others that are experienced. So whether that be through angel groups, AngelList syndicates, something like that, where you can get that experience. And the final part that I would advise people is diversification. So that's kind of a cliche, and that's what a 20 investment number. But there's two parts to that. There's the downside protection that diversification kind of gives, which is where everybody talks about. But actually in the world of VC, it's a little bit different because downside's only half the equation. The other half of the equation actually is the upside. And in VC, there's a thing called power law that plays, where most of your return comes from one or two of your investments. And so to try and ensure that you get one of those outstanding returns, what we call a dragon, you need to have quite a portfolio. So you want to have at least 20, but ideally actually more than that in your portfolio to try and get one of those outstanding companies in your portfolio.
Well, that's certainly good advice. Diversification is certainly key, and that's a great new idea behind why you need diversification. So, the state of investing is changing quite rapidly around the world, and Australia is no exception. How do you see the industry evolving in funding Australian startups?
Yeah, the industry's changed heaps here in the last 5 years in particular. I mean, it's gone from virtually no VCs in the country to hundreds here literally now. So the VC funds under management have gone up literally tenfold in the last 5 years, and the sophistication of entrepreneurs and investors has improved out of sight. There's loads of new accelerators and incubators all around the country, but particularly in Sydney and Melbourne. But Brisbane's coming along, and the other sectors are trying to get theirs established. But even with all that said, Australia, in terms of VC money per capita, is still way behind, say, the US and Israel. I mean, the US is still 10 times that of Australia, and Israel will be about 20 odd times that of Australia on a per capita basis. So we've still got a ways to go to play catch up.
So you see quite a few startups, and what do you think the biggest impact on today's startup investings that really impacts returns? If you had to pick one thing, what do you think is the driving factor in funding today's new entrants?
Yeah, actually, I probably wouldn't pick one thing. I mean, we actually use a kind of a scorecard where we identify a business and we use 17 key factors that we run through and we score. And we do that independently as the partners of the VC fund. So that way, get rid of groupthink, which is a big issue within VCs. But within that, we have a weighted structure and we actually focus on three things. And those are the market itself, the team, and then the solution. And within the market, there's a whole lot of breakdowns, like how fast is it growing? How big is it? How big's the pain point within that market? Are the competitors within that market space the sort of new sort of tech companies, or are they the old fat laggards that we love to attack? The team, there's a lot of dynamics, how experienced they are, how much knowledge they have in their particular space. And then when you go into the solution, you're looking at how good it is, that solution, how defendable is it, what sort of IP, USP. So there's those three dynamics which really play out what we look for in the companies.
So tell us more about your investment thesis for funding startups through CP Ventures. What exactly do you guys look for?
Yeah, so our investment thesis is actually relatively simple, at least at a high level. It's always tricky to execute, but the thesis itself is simple. So we actually look to invest in the best companies in their domain. So essentially companies that can dominate their niche. And from that, we're sector agnostic because we simply just don't know where the next bright idea is going to come from. And we've got quite a bit of experience across a number of different verticals. We focus on the pre-seed, the seed, and the C plus stage. We find right at the early stage that there's not that much competition and you can get really high ROIs. But all the companies that we invest in and the ones that we're really interested all follow the kind of thematic of the fourth industrial revolution, which is the kind of the connected component. And that'll be a fusion of some of the things that we're all very familiar with, from AI, big data, IoT, cloud, VR, all those sort of sectors. And often there'll be a combination of those at play in a particular company that comes in that catches our eye.
Do you have a couple of example investments that you think fit that thesis well that you can tell us more about?
Yeah. I mean, every company within our portfolio, you could look at it and go, does this company or does it have the potential of dominating its domain or its niche in the world? A couple of examples. One of our earlier investments is a company called Uvu, which is literally the first AI solution of matching publishers' articles together with videos. So they've got the world's repository of video content. Think of BBC, Al Jazeera, Reuters, Bloomberg, and the like. And they're able to contextualize that as well as read articles and contextualize that through their AI engine, working with IBM Watson. And they're able to instantly embed videos into the articles of the world, essentially. So they're an amazing example of a company that's just completely disrupting two fighting media sides. So on one side, broadcasters with video, and on the other side, publishers with their articles and the written word. And they're actually combining the two industries together. Another example of something that we really like is a company called, say, Bluefield, which is aiming to be the leading microsatellite company in the world. Think of it as sort of a backpack-size microsatellite that detects gases from low orbit. And they've started to focus on methane, which is responsible for about a quarter of the world's global warming. And there are 8 satellites that they'll be launching in the next year or so. Will monitor the whole world every 24 hours. So it can really make a real impact on the world if it does what they believe it will.
Well, those are two cool startup examples. So when you see the startups building their companies today, what do you think are the main challenges they face? Is it regulatory? Is it market? Is it technical? Or is it something else?
Actually, I would have said something else. I thought with this, I'd focus a little bit more on Australia and the particular nuances of the challenges here. And if I would have picked two, I would have said here, because we're a fairly young market in the world of high growth tech businesses, it's actually finding people, or one of the big problems is finding people that have the experience at scaling businesses, like really growing businesses here. And I would have said that the second big problem is finding founders that think big enough. Pretty much every business that comes into me and gives their forecast will say they're conservative. And I have to sort of point out to them as we try and educate as well that we're not looking for businesses to have conservative forecasts. What we're looking for is much more of a blue sky but still have realistic kind of forecasts. We're not looking for that kind of conservative thought. We're looking for big world thought.
Well, venture certainly goes for the power law rule, so they really have to think bigger for that reason alone. And you see a lot of applications and sectors out there. If you had to pick 2 or 3 that you think are ripe for pursuit today, what would you think are the hot areas to go after?
That's fascinating. I mean, we look at our portfolio today and it's actually really, really well diversified. They, as I said, they all follow the sort of fourth industrial revolution kind of thematic, but there's no particular vertical that we'd sit there and say, actually, that's playing out, whether it be, fintech or IoT or whatever's kind of hot in the sector. We're very much focused on just what do we think can actually turn into a dragon for our portfolio, basically an investment that can return the whole fund. So we don't actually worry about actually focusing on what's particularly good or hot right now as a sector for us. We're just looking for those amazing businesses with amazing founders.
Well, that's great. Well, that's a good overview. In the last few minutes that we have here, what else should we cover that we haven't?
I actually think we've covered a fair few things. I mean, I would say the only extra thing that I would mention is that given that I've come from sort of the world of derivatives and then equity trading, fund management and the like, and then moved into startups, I'd say the startup scene from an investor's point of view is probably the only asset class that I know of out there that you can get kind of ready access to. But you could take $100,000 or $1 million and you can turn that, that 100,000 into $1 million over 5 to 10 years without leverage. It's just an amazing asset class if you actually really know what you're doing and you really, dedicate yourself to it. So it's not for the faint-hearted, but it's an amazing place.
Yes, it's pure alpha for sure. So how best for listeners to get back in touch with you?
Pretty easy. Email is a great way. So Emlyn at cp.ventures. It's EMLYN, bit of a tricky one. Or via our website at cp.ventures and of course via LinkedIn.
Oh, great. We'll add that to the show notes. And thank you for coming on today and hope to have you back for a follow-up soon.
Thank you very much, all. Have a great day.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Paul T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early-stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.